So, Meta. Some major developments in regards to Meta's business model. I mean, these are major developments. Revenue skyrocketed over $8 billion for this company on a year-over-year basis. Yes. And that's in a 3-month span, folks. So that means they're making, we can call it $2.5 billion plus more per month right now than they were at this time last year. That's a pretty incredible thing to think about, right? Now, if you look at every single region is just booming for them. Rest of world, they went from $4.5 billion of revenue to $5.8 billion. And keep in mind, this same quarter last year was their strongest quarter ever by far. So this quarter they were comping against was a very strong quarter. $7.5 billion in revenue they did Asia Pacific at this time last year. They just did $9.2 billion. Europe, they went from $9.4 billion of revenue to $11.5 billion of revenue. And US and Canada, they went from $18.5 billion of revenue to $21.7 billion of revenue. Oh my gosh, right? In some of those regions, they're stronger growth profiles in terms of percentage growth. Some of those are stronger in terms of absolute dollars, right? That is nuts. Now, additionally, something very important I want you to pay attention to right here, and I don't know how many people are even paying attention to this, but I want you to look at right underneath advertising is this category called Other. In this Other category, came in at $519 million, the strongest number by far ever. If you look at this same time last year, they were doing $334 there. So this is just something I want you guys to keep an eye on here that I think is very important. Additionally, if you look at the Reality Labs operating loss, they went from $4.6 billion to $4.9 billion. So that, business lineup is still losing a fortune, but Zuck still sounds very optimistic about the long-term future there. And, they've spent a lot of money there. I hope we get a good ROI on that long-term, right? Total income from operations went from about $16.3 billion at this time last year to $23.3 billion. And if you look at operating margin at this time last year was already insane, 41%, but they just took the operating margin to 48%. There's only a few companies in the world that have operating margins approaching 50%. That's ridiculous. So Meta, booming. If you look at expenses, right, because we want to always keep an eye on expenses for this company, this is crazy. If you look at this time last year versus where the company is now, right, they have brought their G&A, the general administrative, down to 2% of their revenue. 2% as an expense. That's insane. Like, this might be one of the lowest G&A cost profiles for a company in regards to revenue you're ever going to find, ever. I'm not joking you. Like, that's ridiculous. I don't know if I've ever seen 2%. What? 2% G&A of the entire percent of revenue? That's crazy. Marketing and sales came in at 7%. It used to be 8%, so that's better. If you look at research and development, 25% versus used to be 26%, that's better. If you look at cost of revenue, 18% versus 19% previously, that's better. Everything across, so clearly Zuckerberg is still extremely focused on the expense profile of this company and making sure he's lean and mean in running this company. And as a shareholder, I love to see that. Now, additionally, listen, we all need to figure out who's doing Meta's taxes. And we all need to have them start doing our taxes. Because what? Their effective tax rate fell to 12%? 12%? You'll be flipping my flapjacks. From their effective tax rate at this time last year was 17%. So, impressed. That might be the most impressive thing. Who's doing Meta's taxes? Come on, man. Now, you want to see the super important numbers? I'll show you the super important numbers. The super important numbers are always that bottom line, especially when we're talking about a big dog company like Meta that's super profitable. This is what matters the most. Their net income went from $14 billion at this time last year, which was by far and away a record amount, to they just did nearly $21 billion of net income. Insane. Diluted EPS went from $5.33, which had been the strongest they had ever had at that time, all the way up to $8.02 in this latest quarter. You gotta be flipping my flapjacks. Now, capex. I have this circled green and red, and here's why. If you look on a quarterly basis, they basically doubled their capital expenditures. Now, that could be seen as a bad thing, right? Why? Well, the company's spending so much money on capex that you could make an argument that they could be paying more out to shareholders in the form of dividends. They could be doing share buybacks. They could be buying out other apps or other companies. There's a lot of things they could do with that, right? But they're spending on capex, so that's a big number. On the flip side, you could look at that and you say, okay, they're spending all this money, but Zuckerberg's not just going to spend all this money to spend all this money. He's going to spend all this money because he's going to get a massive ROI at the end of this. And I will say, Zuckerberg's done a heck of a job over time spending money and getting a ridiculous ROI. He did that with Facebook. He did that with Instagram. He's done that with WhatsApp, right? He's doing that with Threads now. He's doing that with what they've got going on in the AI space. The metaverse, that whole thing, that's still like, jury's still out on that. That might be the one space we're not sure if he's ever going to get the ROI there. But if you look, man's got a pretty impressive track record, does he not, in terms of spending a fortune and getting it back? And not just getting it back, but like 10x, 100x getting it back, right? If you look at family daily active people, it went from 3.19 billion at this time last year to 3.35 billion. Also, I think it's important on the conference call, he did mention Threads. He talked about pretty much everything they got going on, but Threads is a competitor to X. He said they're basically bringing in 1 million plus users a day, new users. That's a pretty big number. That's pretty darn impressive, okay? Now, this is extremely important, what I'm showing you right here. You're looking at ad impressions here at the top, and below that you're looking at average price per ad on a year-over-year percentage change basis, okay? The moral of this story, when you look at this worldwide, US, Canada, Europe, Asia Pacific, rest of the world, is the rate of how many ads are showing is decreasing, okay? They're still showing a little more ads at this time right now than they were at this time last year, right? But it's a slight amount. But where they're going up significantly is on the average price per ad. So if you are a business that has to advertise on Facebook and Instagram, which is always where you're going to get the best ROI out there that I've ever found, right? Here's the deal. You are paying a lot more money, okay? Look at worldwide, went up 14%. US and Canada was up 12%. If you look at Europe, up 16%. Asia Pacific up 12%. And rest of world was actually up 23%. So if you're doing business outside of those markets and you're running ads on Facebook and Instagram, you're paying 23% more for the same ad right now than you were at this time last year. So if you want to talk about inflation, there's some inflation going on with Meta here. Holy smokers, that's no dang jokers. Now, what did I grade their income statement? Let me show you what I grade their income statement. A+. This is magnificent. Their revenue went to $48.3 billion from $40.1 billion. Great increase, 20+%. Cost of revenue went up only $1.2 billion. That's very manageable when your revenue's up over $8 billion year over year. Research and development went up about, we can call $1.6 billion on a year over year basis, but once again, the revenue's up over $8 billion year over year. Marketing and sales was basically flat. What? That's crazy, to increase your revenue $8 billion plus and keep your marketing and sales basically flat is impressive. But that's not the most impressive thing. General administrative, they went from $2.2 billion down to $761 million in G&A. The only bad news with that is I don't think they have any more levers to pull when it comes to G&A expense. I don't think they can pull that down anymore. That's ridiculous. So total costs and expenses was only up, we can call it about $2.3 billion year over year, which is nothing when your revenue is up $8 billion plus. So that means your income from operations is going to explode to the upside, which is exactly what happened. Their income from operations went to $23.3 billion from $16.3 billion. Net income went to $20.8 billion from $14 billion. Diluted EPS went to $8.02 from $5.33. Bravo. Bravo, Meta. And I really wanted to only give them an A grade because they're my biggest company and I was looking to find something to fault them with, but I'm like, dude, this is just so dang nearly perfect. Come on, that's an A+ grade. If we're not going to give them 100% on the test, we're going to give them a 98%. And guess what? A 98% still an A+. Banger. Not only that, look at their cash and cash equivalents went to $43.8 billion from $41.8 billion. If you look at marketable securities, $31.9 billion from $23.5 billion. Now, long-term debt did increase about $1 billion, about $10.5 billion long-term debt increased year over year. But at the end of the day, what you got left for shareholder equity? That's what really matters, right? And their shareholder equity increased to $182 billion versus $153 billion at the same time last year. So very impressive balance sheet here. Now, in regards to the whole game of did they beat what Wall Street was expecting or not? Well, they not only beat, they crushed. 802 EPS, 677 was expected. Revenue came in at $48.3 billion versus $47 billion. I said $700, here we come, right? And we'll talk about the stock price in just a moment. But this is very important, that EPS beat. It's not a small beat, it's a gargantuan beat. It's insane. The important thing you gotta understand is this is 2 straight quarters now that Meta has obliterated earnings per share. Now they've beaten EPS more quarters than that, but it's 2 straight quarters they've obliterated it, which means when you go to look at the likely forward PE for Meta, it's likely lower than what you see. And that doesn't matter if you're talking about Seeking Alpha, if you're looking at 1000xstocks.com, if you're looking at Yahoo Finance, it doesn't matter what service you're using. When you go to look at that forward P it says for Meta right now, keep in mind there's a high probability, I would say, that it's actually lower because all those estimates are taking analyst estimates into account, right? And kind of compiling that. But guess what? Analysts continue to be wrong on Meta. Meta continues to be far more profitable than what analysts expect. So if you go to use 1000X or any service out there and you see it says, let's say a 25 forward P for Meta stock, keep in mind that's an estimate. It's probably going to end up being lower than what it says. And that's beautiful. If you're somebody that owns a stock like that, right? Absolutely beautiful, okay? So, moral of the story is, we're looking very good in regards to this. Now, I don't know if you guys saw this video. I got a small channel called Jeremy Lefebvre Makes Money. It's my reaction channel. I react to videos and articles and analyst upgrades and downgrades and all types of reactions on that channel, right? And by the way, thank you for everybody that follows me on that channel as well. I appreciate y'all for joining me over there. But I did a video last night on the channel. I said this is a huge opportunity for investors, right? And I discussed several subjects in that video, and I reacted to several videos. But one of the things I did in that video is I ran projections, and I showed you projections on Meta stock and where I expect Meta stock to go 2025, 2026, 2027, 2028. And the moral of the story is we have a lot higher to go than $600 something. So we're on the path to $700 to $800 this year, in my opinion, okay? This year. Be somewhere in that $700 to $800 range. Maybe approach a $900 level. We'll see. But I can tell you if they keep coming in and beating numbers, we're looking pretty good. But one of the reasons the path looks pretty good here is, one, I can tell likely where revenues are likely going to be roughly at this year and earnings per share. But additionally here, the company's set up where, especially in this first quarter, I think they set up for a very easy revenue guidance. So I think they brought down any like super high expectations around revenue now. So now they're going to set a baseline to come in and beat that number pretty handily, in my personal opinion. But they're playing a little bit of the game of Wall Street on a better level than they used to. They're setting themselves up for coming in and beating analyst expectations, right? Additionally, they already started out by saying they're going to do this big capex number. And I think that matters significantly because I don't think they're going to go over that big capex number. I think they're going to be in that range. I don't think we're going to be in some situation where a quarter from now or 2 quarters from now, Meta's going to come in and say, you know what, the capex number we gave you guys, it was too low, we're taking this baby higher. No, I think they're going to stay in that range. And if they don't stay in that range, it will be because they actually brought their capex down, not up. That's my personal opinion. We'll see what happens with that. But that's what I truly believe. And that's a very different situation than maybe past years where you get through the year and the next thing you know, they're taking capex, expectations up, right? Very important you understand that. So the stock sets up very well now. I think they just set the company up in such a phenomenal path this entire year, especially in regards to stock price. Like I'm like 700, 800 is going to be in range, rather quickly here in regards to this one. And I don't have to wait 6 years for that to happen, right? So looking really good here, sitting on $948,000 in gains on Meta. I wouldn't be surprised if this one hits $1 million plus gainer here very, very shortly. So Meta, bravo. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community where we're constantly keeping in touch with each other, talking about what's going on in the market. How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. All right, let's talk some more stocks.
Talked about it a moment ago, but I am looking at this post from Mark Zuckerberg that just hit on Facebook.
Did Kramer freeze? What happened here? What in the world?
Have you guys seen
Take one?
Defining year, he calls it, for AI. That's 2025. He expects Meta will be the leading assistant serving more than 1 billion people. Llama 4, of course, is their open source LLM, will become the leading state-of-the-art model.
Right. Oh, yeah. The Llama opportunity is just incredible long-term for the company. I don't think Wall Street gets it right now, but we know Zuckerberg gets out in front of these things and he builds something that ends up becoming massive. And, it's big. It's big. Can I say it's bigger than Facebook was? Can I say it's bigger than Instagram was? I don't know. There's a potential it could be, but even if it's not, even if it's half as big of an opportunity, that's still an incredible opportunity. But you got to understand the Llama models long term might be an AWS type opportunity for Meta. So do keep that in mind.
Next numbers in there too.
To power this, guys, listen, Meta is building a 2 gigawatt plus data center that is so large it would cover a significant part of Manhattan. We're going to bring online 1 gigawatt of compute.
Here's the deal, okay? Zuckerberg and Meta, they're not just going to spend this ridiculous amount of money unless there's a way bigger amount of money at the end of the day, right? They're not just going to do this to do this. Like, that's not the way this works, right? No different than Amazon wouldn't just build some massive warehouse unless they're pretty confident like they're going to be able to sell a lot of goods out of that warehouse over the years, and they need that warehouse, right? Amazon doesn't just say, yay, we're going to build a massive, AWS facility just to build it. Like, no, that's not how this works. So if Meta's out there saying we're going to, build places that would be sizable in Manhattan, right? They're doing it for a reason, and the reason is because there's just an incredible long-term opportunity Zuckerberg sees here.
25 will end the year with more than 1.3 million GPUs.
Wow. So
1.3 million GPUs they're going to end the year with? You're going to be flipping my... What the heck happened here?
What's Meta doing? Again, we're going to bring online 1 gigawatt of compute in 25. Will end the year with more than 1.3 million GPUs.
Wow. So
we're planning to invest. And again, Jim, I think these may be in line with the numbers, so I don't want to say that.
Tell me, I'll tell you. I know the numbers.
65 billion in capex this year. 60 to 65 billion. That's a number they've been on.
Well, remember, he has to have. Did he say that Meta AI is going to be number one? Because it isn't. Remember when he said Meta AI was going to be number one?
Yep.
Okay, so what are we talking about here? First off, this was the big thing for Meta. Like, as long as essentially they were roughly in the range that Wall Street was thinking as far as capex goes, off to the races. Like, if Zuckerberg came in and he said 70 billion, 75 billion, 80 billion, something like that, that would have freaked out Wall Street. They would have sold the stock off hard today. We'd probably be talking about a stock that's in the 500s today. But since he came in the range, kind of what people were thinking roughly, like, up.
It isn't. And he said it was going to be by last. This guy's, look, I think this is
interesting that he chose
that it's going down because I think it's not
that he's put this out.
It didn't have any pizzazz.
Yep. Massive effort over the coming years will drive our core products and business, unlock historic innovation, extend American technology leadership, says Mr. Zuckerberg.
But again, the stock's trading down on what? What phrase in that thing is negative? What phrase?
Well, I don't know. Maybe to the 60 to 65 billion in capex this year. Maybe that is just reiterating what people already anticipated. I know. I don't know.
Look, Microsoft's doing 80. I mean,
by the way, I would point out
it's good for Nvidia.
What I'm aware of in the financing markets and the way that some of these data center projects are structured, you're actually bringing in a good deal of private equity money. A lot of it in sort of debt or other kinds of financing. But it has the effect of lessening the capex expenditure on paper from a Meta. They are the tenant. They will pay interest in the private credit markets by borrowing there to a certain extent to help as well.
But we should be.
I'm saying that the numbers are even larger.
But that means we should be looking at free cash flow. That's apples to apples.
Right.
And we have to find out free cash flow in that.
That's a good point.
Okay?
That's a good point.
Because it can't be triggered by a capitalization. We have to get that.
But again, when you just think about Meta just talking about creating data centers that are so large they will cover a significant part of Manhattan.
Oh, it's massive. Yeah, so check out some of these charts around Meta, right? First off, looking at a trailing 12-month of Meta's revenue growth has been phenomenal, right? And that should continue to grow for, honestly, years, maybe even decades to go in the future. Margins have been certainly coming up from kind of troughing here around this kind of 78% range. If you look at the latest quarter, around 81% gross margins. Net margins troughed right around here, fourth quarter of 22 at around 14%. Net margins are now around almost 39%, and net margins should likely go above 40% in 2025 for Meta. Look at the earnings per share growth of this company. Is that incredible or what, right? Now, also, free cash flow. They spoke about free cash flow. Free cash flow, on a trailing 12-month basis, we're looking at $52 billion of free cash flow here for Meta on a trailing 12-month basis. If we look on a quarterly basis, look at that, $16 billion plus just on a quarterly basis. Now, go ahead and look at operating cash flow on a trailing 12-month basis, $82 billion. Latest quarter operating cash flow alone, almost $25 billion. But on a trailing 12-month basis, almost $83 billion. Like, they're going to be operating cash flow wise, they're going to be over $100 billion, like very short order. Like, I'm talking in the next year, they're going to be well over $100 billion of operating cash flow. Operating income on a trailing 12-month basis, $62 billion. Latest quarter alone, $17 billion plus. Like, that's absolutely incredible. And then the shareholder equity is higher than it's ever been. So, I mean, Meta's just unbelievable. Just a beast. Just an absolute beast.
I'm not sure what he talks about. Significant.
You get a sense here.
By the way, back to our other theme that we'll endlessly talk about, you get a sense into the challenges for power and things of that nature.
Well, we have to spend so much time on power because we are beginning to get, when I've been dealing with these natural gas companies, they're being greenlit and they're not being talked about, and they're starting to realize, why is everything being nuclear? Because nuclear is 7 to 8 years, okay? 7 to 8 years. And if you go over the GE Vernova quarter, that's why Vernova, someone downgraded GE Vernova today. That guy doesn't know what he's doing. The GE Vernova they've got all bases covered, but it's natural gas.
But
it's
yeah,
natural gas.
I mean, Parish Data Center in Louisiana is one of the biggest ones for Meta. And again, I'm telling you, the way that they structure this, it's not all their capex, or at least doesn't go down as all of theirs, because in some of it is private credit, borrowing from. They're using the Apollos of the world, for example, to provide it. Let's see.
That's the Entergy project.
Right. They're the power provider.
Huge.
Yes.
Just huge.
The numbers are staggering.
Yeah, and this capex guidance will be hot relative to the street, just above $50 billion. I think.
Okay, that's the number.
That's what they're going to say.
Jim.
That's what they say. It's too expensive.
It's higher. Yeah.
I tell you, if you don't spend. People don't go back over what Jensen said. For every dollar you spend, you get $4 in return. So to me, Microsoft is the leader in this. And I know that Zuckerberg is behind because Zuckerberg, and by the way, Meta AI, I don't know if you guys are using it.
I don't use
really.
I use chat. I don't use
really.
Chat.
It's wild card weekend, that thing.
And I got to start using Gemini a little bit.
That does not make the playoffs. Meta AI is not in the playoffs.
Well, we'll talk more about return on some of these investments. Cover the Economist is all about how the Chinese are doing this for a lot less money. But Julia Borston's watching these particular Meta numbers. Morning, Julia.
Good morning, Carl. Yeah, let's just put these capex numbers in context here. 60 to 65 billion on capex this year, as Meta says that they were going to be growing their AI teams significantly, also saying they'll have the capital to continue investing in the years ahead. He is saying this is a massive ramp up in spending on AI. To put this in context, it's up from $38 billion in capex in 2024, and analysts have been looking for 51 to 53 billion in capex for this year. So that's meaningfully ahead of that. Zuckerberg also talked.
Yeah, but it's not so like, oh my gosh, this is a crazy number. Like, this is like, I think people deep down, they kind of knew Zuckerberg was going to, Zuck loves to spend, right? So he's going to probably be higher than the street, but there wasn't such a number that was like shocking, right? If they came in with something with a 7 in front of it, or an 8, like Microsoft's doing 80 billion, that would have freaked everybody out bad. This is kind of like, oh yeah, Zuckerberg's spending more in the street, but it's not that bad. It's kind of roughly, the ranges that I think a lot of people would think. Now, obviously you could say, well, they could spend that money on share buybacks and dividends, but at the end of the day, if Zuckerberg thinks they're going to get a much better ROI on all this AI spend they're doing, then go ahead and do that. The Llama models, if that becomes by far and away the biggest in the world to build, all types of AI-related services on long-term, like that's just an incredible opportunity.
About expectations for that Meta AI assistant tool to significantly grow in terms of its reach. So the last number they reported for Meta AI was 500 million at the end of the third quarter. That was at the end of October. Now they're saying they expect to hit 1 billion users of Meta AI this year, so a doubling this year. And just talking more about the importance of AI. Remember, this is a company that pivoted from focusing on ads and social media to the metaverse, and now it's really about AI driving everything going forward.
Meta sometimes does nothing but pivot, Julia.
Well, they are good, view? And he's a competitive guy, and the more you spend, still the better. I know there's still this camp out there which says, look, it's got to slow down. And there are a lot of people who feel
I'm telling you, it's understated, too. I'm telling you, because of the financing arrangements as well. The
I would like that. But you're talking about Blackstone, you're talking about Blue Apple.
Yeah, because Meta's gonna cover their side, no problem. They got so much money. But you know what? Another way to look at this, right? Here's another way to look at it. You want to play chess? We can play chess, baby, okay? Listen. If Zuckerberg's willing to spend that much, it could mean that Meta's numbers are going to be far ahead of what Wall Street's thinking for 2025. Revenue, earnings per share could far exceed where analysts are at right now. That's why Zuckerberg's willing to spend even more money than what Wall Street thinks. Wall Street might be low on their revenue number by 10 or $20 billion this year. And so we'll find out what's going on here. But if you want to kind of play a little bit of game of, thinking ahead here, there's a real potential that Wall Street might be way behind on numbers here. And Meta's going to have a far better year revenue-wise and profitability-wise than analysts believe. And that's why Zuckerberg's willing to spend more than what Wall Street thought he was going to spend, right?